Day trading is one of those games that are zero-sum game. You make money off of someone else losing money. Meaning, it costs you so much if you have no edge in the market. And by the end of this video, you will be able to predict where the market is headed tomorrow on most currency pairs and commodities. Alright, let's jump into this. Alright, so I am using a site called TradingView to analyze the charts. And the first thing that we do when we go to TradingView is go to settings, and then you want to go to events so that you check that session breaks because it shows you the beginning and the end of the days. So this is oil. How do you predict where the market is headed tomorrow? We start on Monday. So on Monday, what you come and do is just draw lines. And you want to draw one line at the highest point price has reached that day and the lowest point price has reached that day. You've not traded on Monday. All you've done is just drew the lines. Now, you need to pay close attention to these dotted lines. So you can even add your own lines so that it's clear you know where the day begins, where the day ends. That's on Monday. On Tuesday, we also have no intention of trading. We just come and draw our line to show us the end of Tuesday. And also, what we are interested in is what happens on Tuesday. Now, what we want to see is price breaking out. So we just want to see all these candles, price going below this low or this high. In our case, it's this low. Price goes below that. And then what we want to ask ourselves is at the end of the day, so the day closes at this line. Does the day close outside of the high or does it close inside? And so to define outside, outside is just below the low or above the high set on Monday. And then inside is anywhere in between the high and the low. And in our case, what happens? Price is outside. So price has broken below that line and then it has closed outside. All right. So we are not really trading yet. What we want to do is we want to bring this line now to the lowest point price reached on Tuesday because so far we have nothing working for us. Now, this is now the high of the week. This is also now the low of the week. We go to Wednesday. Remember, we've not traded. On Wednesday, what happens? Price breaks out. So we want to see this breakout. And then we look at the close. We've not traded yet. We look at the close. Where is the close? In relation to the high and the low. So we are inside of this line and this line. So we broke out, price closed back inside. This is what we call a failed breakout. And this is the only signal that you need to pay attention to. Because a failed breakout at the low of the week is a buy signal for the next day. If this was you on Wednesday, you saw a failed breakout, then you are thinking the next day we have a very high probability of price continuing to go up. And so you will be looking for opportunities to buy oil when you have that low price. And what happens? We see price going up. So all we had to do is wait for this price to go down, finish going down, and then boom. And you can see price did continue even going higher in the next day. So this signal is very important, and this is our edge. Failed breakouts. We can look at another example. Let's look at USDCAD. This is the Canadian dollar. Still, we use the same process. Monday sets the high and the low of the week. So remember, on Monday, we don't have any intentions of trading. We just observe the market. Tuesday also stays within the high and the low of the range, which is not our setup, not a signal. All right. What happens on Wednesday? On Wednesday, price breaks out. So remember, this is where Wednesday closes. Price breaks out and then closes outside of this high and low. So you can see the close is outside of the low, which is also not a signal for us. All right. So all we do is we adjust our low to that level. And then we go to Thursday. We've not traded. We are just observing the market because we need that edge at our side. All right. So on Thursday, price breaks out. So you can see this box. This box highlights where price broke out. So price breaks out. But at the end of the day, price closes back inside of the range. So we broke out, we've closed back inside of the range, giving us a failed breakout at the low of the week, which is a signal to look for buying opportunities for the next day. And so what happens the next day? The next day we have our buy. In fact, we have two opportunities to buy. We have this opportunity here in the London session, and we also have this opportunity here in the New York session to buy. So if you want to know where the market is headed tomorrow now, this is Euro NSD, and today is on a Friday, and we need to know where the market is headed on Monday. What do? Step 1, you come to Monday, it sets the high and the low of the week, like that. No problem. Tuesday breaks out and closes back inside of the range as a failed breakout. The next day, price broke out, closed outside of the range. No problem. Thursday breaks out and closes back inside of the high and the low of the week, which is a failed breakout at the high of the week, which means sell on Friday. And then we also have our new high of the week set on Thursday. And look at Friday. Friday breaks out and closes back inside of the range, which is also a failed breakout, which is a sell signal for Monday. And so when I'm coming to the screen on Monday, then I know there's a very high probability price will continue going down. Simple. So anybody can do this to know where the market is headed. This is the secret. This guide comes with a free 30-minute one-on-one call as a bonus so that we can do a one-on-one live market analysis together so that you can understand in depth what exactly you need to look for in order to know where the market is headed the next day. So once you are done with this guide, go ahead and book that call. I will see you there.